In January 2026, global gold prices surged to record highs. Spot prices surpassed $5,100 per ounce. Some markets saw gold nearing $5,400 per ounce. That is not a typo. $5,000 for a single ounce of yellow metal. Now here's the uncomfortable part. Your grandfather's investment advice, the one about gold being safe, boring, and stable, just made some people extraordinarily rich, and it is making others panic buy at the worst possible moment. So what is actually happening? Is gold the fortress everyone claims it to be, or are millions of investors about to learn a very expensive lesson about what safe really means? Stay with me, because by the end of this, you will understand something most financial advisors will not tell you directly. Let us start with the obvious question. Why is gold suddenly exploding? The simple answer is fear, but that is too easy. The real answer involves something far more calculated. In 2024, central banks around the world bought more gold than any year in recorded history. We're talking over 1,000 tons. China alone added massive reserves. Poland, Turkey, India, they all followed. But here's the detail most people miss. These are not emotional purchases. Central banks do not panic buy. They plan decades ahead. So when the institutions that literally print money start hoarding gold instead, you need to ask yourself what they know that you do not. Peter Schiff, the economist who famously predicted the 2008 crash, has been screaming about this for years. He argues that central banks are quietly preparing for a world where the dollar is no longer the global reserve currency. Gold, in that scenario, becomes the only universally trusted store of value. Think about that for a second. The people who create money are buying something they cannot create. I want you to drop your opinion in the comments right now. Do you think central banks know something we do not? So why is everyone suddenly obsessed with gold? Two words: uncertainty and distrust. When inflation hit in 2022 and 2023, people watched their savings lose purchasing power in real time. The stock market swung wildly, crypto crashed, banks failed, and suddenly the boring investment your parents mentioned started looking very attractive. Gold does not pay dividends. It doesn't grow like a company. It just sits there. But that is precisely the point. It sits there when everything else is falling apart. Ray Dalio, founder of the world's largest hedge fund, has repeatedly said that gold is a hedge against currency debasement. When governments print trillions of dollars, the value of cash erodes. Gold, in theory, holds its purchasing power across centuries. And right now, trust in governments is at historic lows. Trust in banks is shaky. Trust in the stock market is conditional. Gold does not require trust. It requires nothing. It simply exists. That psychological safety is driving demand through the roof. But here's where things get complicated. Is gold actually safe? Let me give you both sides, honestly, because anyone who tells you gold is purely safe or purely dangerous is selling you something. The case for gold is straightforward. It has survived every financial crisis in modern history. It held value during the Great Depression. It surged during the 2008 collapse. It climbed during COVID. When paper assets burn, gold tends to glow. It is also genuinely scarce. Unlike dollars or Bitcoin, you can't create more gold with a keyboard. The total supply on Earth is fixed. That scarcity creates inherent value. Now here's the other side, the side most gold enthusiasts conveniently forget. Gold dropped nearly 40% between 2011 and 2015. People who bought at the peak waited over a decade to break even. It pays no income. You can't reinvest returns because there are no returns. You're purely betting on price appreciation. And here's the hidden risk. Gold performs best during chaos, which means if the world stabilizes, if inflation cools, if peace breaks out, gold can fall hard and fast. You're essentially betting against stability. Warren Buffett famously dismissed gold as an asset that just sits there staring at you. He prefers productive assets, businesses that create value. Gold creates nothing.
So, who is right? That depends entirely on what you're protecting against. Tell me in the comments, are you buying gold right now, or do you think this rally is overdone? Let's talk about how people are actually buying gold in 2026, because the options have expanded dramatically. The traditional route is physical gold. Coins, bars, jewelry. You hold it, you store it, you own it outright. The problem is storage, insurance, and the very real risk of theft. Also, try selling a gold bar quickly when you need cash. It's not exactly liquid. Then there are gold ETFs, exchange-traded funds, like GLD or IAU. These let you buy gold exposure through your brokerage account. Easy to trade, easy to sell, but you never actually own the metal. You own a piece of paper that promises gold exposure. Some argue that defeats the entire purpose. There's also mining stocks, companies that dig gold out of the ground. These can outperform gold itself during bull markets, but they come with business risks, management risks, and all the volatility of equities. Finally, there are digital gold platforms, apps that let you buy fractional gold stored in vaults. Convenience, but you're trusting a company to actually hold your gold. That trust word again. The irony is thick here. An asset people buy because they distrust institutions often requires trusting a different institution to hold it for them. Now let's address the elephant in the room. How is Trump driving up gold prices? This is not about politics. This is about policy in consequence. When Trump announced sweeping tariffs in early 2025, markets reacted immediately. The threat of a global trade war sent investors scrambling for safety. Gold surged. But it goes deeper than tariffs. The uncertainty around Trump's economic policies, the unpredictable announcements, the pressure on the Federal Reserve, all of it creates an environment where traditional assets feel unstable. Mohamed El-Arian, chief economic advisor at Allianz, noted that policy unpredictability is itself a driver of gold demand. When investors can't model the future, they retreat to assets that have survived every kind of chaos. Trump's tariffs specifically triggered fears of inflation, since tariffs raise prices on imported goods. That inflation fear pushed more money into gold. His rhetoric about the dollar, about potentially restructuring debt, about challenging global trade norms, all of it fuels demand. There's also a geopolitical layer. Countries that feel threatened by American policy are diversifying away from dollar assets. China and Russia have been aggressively buying gold. They're hedging against a world where the dollar might be weaponized against them. So Trump is not just one factor. He's an accelerant poured on an already burning fire. Let's zoom out. What does this actually mean for you? Gold at $3,000 is not necessarily a buying opportunity. It might be, or it might be the peak of a fear-driven rally. History shows that retail investors tend to buy gold at exactly the wrong moment, when headlines are screaming and prices are highest. If you're considering gold, ask yourself what you're hedging against. Inflation, currency collapse, stock market crash, or just vibes? The smart money treats gold as insurance, not investment. You don't buy insurance hoping your house burns down. You buy it accepting you might never need it. Most financial advisors suggest 5 to 15% of a portfolio in gold at most, not as a growth engine, as a stabilizer. But here's the uncomfortable truth nobody wants to say out loud. If gold needs to save you, things have already gone very wrong. And if things go that bad, you might want food, fuel, and community more than shiny metal. So where does that leave us? Gold is at record highs, governments are hoarding it, trade wars are escalating, trust in institutions is crumbling, and millions of people are rushing into an asset they barely understand, convinced it'll protect them from a future they can't predict. Maybe they're right. Maybe gold will keep climbing as chaos spreads. Or maybe this is the moment future investors will look back on as the peak of a collective delusion. Nobody knows. That's the honest answer. But here's my question for you, and I genuinely want to hear your answer in the comments. If gold is the safe investment, why is most people only buying it when they're scared? Think about that. If you found this useful, subscribe so you don't miss what comes next, because the gold story is far from over and the real implications are still unfolding.